Hello everyone, this is Ted Bauman here, editor of the Bauman Letter, with your Friday Bauman Daily video. This week we had a video on the subject of taxation, more specifically why Wall Street paradoxically actually would prefer more taxation because it would essentially get the economy going again and lead to probably higher profits for companies even if taxes went up. A lot of people pushed back against that, as I predicted, as always happens. The problem was, however, that they weren't addressing the point that I made. They were addressing another point entirely. And I want to talk about that today because I think it's an important point just more generally, particularly when investors think about public policy. It's never a good idea to base your approach to public policy and your assessment of the economy and of specific companies on things that are simply not directly relevant to the question. Now, let's just recap quickly what I said during the video on Monday. Here's a chart that shows what is known as the national income model. This is a three-sector model which excludes the foreign sector of imports and exports. Now, the model, despite the fact that it looks kind of complicated, is fairly simple. You've got the household sector, which supplies both labor and materials and capital goods, etc., to the business sector. The business sector essentially buys labor from the household sector. It also buys capital equipment and goods from other firms, which are ultimately, again, purchasing labor from the household sector. Now, in the normal course of events, the business sector makes income payments to the household sector. That's the bottom arc. And the household sector makes consumption expenditure payments that go to the business sector. At the same time, the household sector saves. That money goes to the capital market. That money is then directed towards the business sector for investment. And then you have government, and government is essentially a third party to the transaction. It takes in money in the form of taxes, but also loans in the form of treasury bonds that are sold to the household sector and to the business sector. Now, the reason why this chart is important, I'm going to come back to it right now, is because it does not address the question of the desirability of taxation in any way. It simply observes that this is the way the national income of any country, including the United States, flows through the economy. Now, the important thing about the national income model is that it posits that the total sum of national income depends on the flows of payments and expenditures and essentially between households and businesses. So fundamentally, if for any reason households and businesses expect to want to hoard money, or they don't want to spend money, they want to keep it under their mattress, businesses don't want to invest, etc., you can expect a decline in the level of national income because that money is being taken out of circulation. It's being put wherever it's put, whether it's put into the banking sector or invested in the stock market, wherever it may be. Those leakages from the potential spending of the economy and the potential production of the economy mean that the economy slows down. And that means that people's expectations of future growth in turn go down, and they reinforce their desire not to spend or not to invest. That in turn leads to a decline, basically a vicious cycle downward in the economy. Now let's return to the chart and let me just reiterate what I said about the role of government. As you can see, in this case, if we have a situation like we've had recently, where the red X's are, you can see that consumption expenditure for a lot of people has declined because they don't have enough income to spend. And specifically, the business sector has essentially decided that it's a good idea to cut investment and employment. In fact, here's a note, or rather a chart that came from Axios the other day, showing the expectation of many firms in the United States that they will actually be cutting jobs next year. Now, they're doing that for precisely the reason that I just gave, that they expect to see a decline in the overall level of economic activity, or else rather a slower rate of growth of economic activity than we would have had otherwise. And as a result, it doesn't make sense for them to want to invest. So instead, what's happening is that a lot of people in the household sector are putting money through savings into banks. They're trying to squirrel away money to avoid running out if the economy slows down again, if COVID picks up again. The business sector is doing the same thing. Now, here's the problem. If that happens, that means that the economy is going to slow down. That means that business revenues will go down, earnings per share will go down, and overall the economy will experience slower growth than it would otherwise. But then you have the government sector. The government can basically pay households for services, but much more important than that is simply providing stimulus payments to households so that they have enough money to spend, which they will then in turn spend on things that they consume from businesses. At the same time, the government can buy goods and services from the business sector. As I said in our video the other day, they could basically be building highways, bridges, high-speed rail. They could be investing in rural broadband. They could be doing all kinds of things. But essentially, the theory behind this national income model is that in a situation where individual households and the business sector are not spending, the government can come in to kickstart spending by spending itself. Now, a lot of people have focused on the question of taxation and also on the question of government deficits. But here I want to call your attention to the box in the upper left, so the Fed. Essentially, the Federal Reserve has provided liquidity to capital markets all year, and that has had a huge impact on the value of the stock market. That money has not gone into the form of investment in the business sector, however, because, again, the leaders of companies expect that the economy is going to continue to be slow. Now, here's the critical thing. Very few people have actually complained about that. But when the Fed provides liquidity to the federal government in the form of buying treasury bonds that the government can then use to either provide stimulus to households like it did with the checks earlier this year, or if it buys goods and services from the business sector, everybody goes up in arms because they don't want the government to be making spending decisions. And here's where the problem starts, folks. You have to separate your attitude towards the notion of taxation and the government as a spending entity from the notion of the national flow of income through the economy. I'm not making a judgment about whether the government is a good spender of money or not. I'm simply observing that under the circumstances where people are expecting reduced income, reduced sales in the future, they are going to change their consumption patterns accordingly, whether they're households or businesses that are going to invest. And we already see this. The chart that I showed earlier from Axios showing that many CEOs are expecting to have significant layoffs next year in order to increase margins and increase earnings per share. Now, in that situation, there's only one way to go, and that is downwards. Now, the whole theory behind government spending as a way of kickstarting the economy is that it doesn't really matter what the government spends it on, as long as it's spending, because it's really a quantitative issue. You're trying to make sure that money gets into the economy so that people will have enough to spend, which then prompts businesses to invest because they have something to invest in or a reason to invest. Unfortunately, though, most people ignore that entirely, and they want to go straight to the question of whether or not taxes are a good thing and whether the government is a better spender than they are. So here's a couple of quotations from the comment section. Simon says, so the government is more efficient with their spending of tax money and creation of growth than companies are with their own money. Ha ha ha. Phil says the government isn't better at spending my money than I am. I bristle at the thought. Also, they aren't willing to be taxed more. They're willing to tax the working poor more. Now, the problem is that most of these comments did not address the question that I raised. The fact is that the government taxes all the time. I don't see many people complaining about the fact that we have an army and a navy and an air force and a marine corps, but that's exactly what the government does when it takes our money and spends it on them. It really doesn't matter what the government spends the money on, although the important thing is that it should be spent in a way that generates large-scale demand across the entire country. For the government, just for example, to spend money on defense contractors means those defense contractors get more revenues, and so their suppliers get more revenues and their employees make more money, but that doesn't spread out through the whole economy. So remember, this is not about the efficiency of spending. Yes, it's a good thing for money to be spent on things that are efficient and effective, but this is not the same kind of spending decision that we're talking about when it comes to household or business investment. And the problem, I think, also is that a lot of people are instinctively against taxation because it is the ideology that they adhere to. And I understand that. I understand a lot of people are anti-government. That has been the message that's been delivered to us for the last 2 generations by the dominant political classes in the United States. But the reality is that taxation happens, the government has a role to play, and particularly in a situation like we're in now with very deficient demand, this is why stimulus is so important. My observation and our argument on Monday is simply that Wall Street recognizes that we are far more likely to have a tax and spend government under Democrats than we are under Republicans, and under the current circumstances, that's what they prefer. They're bullish on that because they understand this model the same way I do. They understand that the Fed's interventions only really have an impact at the level of the stock market and in corporate credit markets. They don't have an impact on consumer spending because the money never gets to consumers. So essentially, my argument is that forget about what the government spends the money on. Forget about your personal ideas about taxation and whether you could spend your money better than the government. The fact is that if everybody is making private decisions not to spend, you are going to end up with an economy that is going to go into recession. This is the way governments have coped with recessions for as long as there has been fiscal policy, and that is really something that is not disputable when it comes to empirical fact. Now remember, the Federal Reserve has been playing an important role in supporting the economy and supporting corporate debt markets. It has prevented companies from going bankrupt, not by giving them money, but by basically saying to the bond market, we will, if necessary, step in to buy bonds, including junk bonds, in order to prevent their prices from falling and making the interest payments for the companies in question so high that they'll go bankrupt. Now, I've never heard anybody complain about that. I've heard a few people complain in the sense that they think that firms should be allowed to fail. But essentially, when the Federal Reserve does this, there's no question. But whenever you raise the question of taxation and the government spending money to stimulate the economy, to get real business going, get real household spending again, then it becomes a horror show. Now, again, I understand the objections to taxation, but there's one thing to remember. We all benefit from taxation in the sense that we would not have an economy without what the government provides. And it's, you don't have to be pro-government just to recognize without roads, without an internet, without policing, without the judicial system, without a legislature, without some way for us to organize ourselves as an economy, there would be no economy. In fact, we'd probably be living in medieval conditions with fortresses surrounded by ravenous peasants. So my point here is simply, you got to get past this notion that when somebody like me says, this is why Wall Street is bullish, this is where the stock market is going, because they think this is going to happen, there's no point in getting upset about it, because of a philosophical objection to taxation. That's not the argument. That's not the point. Wall Street understands this, and it's not just because Wall Street is full of rich money bags who expect to make money regardless of what happens. They are rational investors. Yes, many of them are pretty sharp about it, and they take advantage of a lot of people. I've argued in my previous videos that our economy is built on taking money out of the pockets of ordinary Americans through overpricing because of monopolies, through trying to encourage debt, basically making us all debt serfs, if you want to continue the medieval metaphor. But fundamentally, Wall Street also knows that the basic idea of the national income model is the way things work. And if you want the United States economy to recover, if you want companies to have earnings that will allow them to hire and buy more capital and actually stimulate activity, it has to come from somewhere. And in this case, they're saying, if it comes from Washington, we'll take it. Anyway, I just wanted to do this video today because I think it's an important addition to the basic thesis, is that you got to take things as they come. We took the Fed's interventions, we benefited from them, we've enjoyed them. Now the federal government and fiscal policy is what's coming next. Even the Fed itself is begging for it. Anyway, this is Ted Bauman signing off. I will talk to you again next week. I look forward to your comments.